Welcome to the daily update for Wednesday, February 2nd, where we'll talk about the action in the market today and then see how things look for February 3rd. And things are looking a little more positive. We had an up day. That's why you see the green arrow on the thumbnail here. But we may be seeing some overhead resistance that I'll point out in the charts here. And just at the time I started to record this, Facebook is really having some trouble right now in the after hours market and in the overnight market. You'll have to see if that carries through into the session on Thursday, but their earnings were disappointing. And so the market's down pretty hard. Right now we have the S&P 500, which Facebook is about a little over 2 to 3% of the S&P 500. So the S&P 500 is down about 1%. The NASDAQ is down over 2% in overnight trading. So we'll just have to see what happens if people come in and go, oh, this is a buying opportunity, or is this going to take things lower and shift our current environment? We're looking pretty positive right now, but there are some things to be aware of, and it doesn't mean that that positive environment will necessarily carry over into Thursday. So here's the update for Thursday, February 3rd. Just to give you an announcement, I do have a Facebook group. It's a private group. We want to be able to have lively and spirited discussions in that group. You can ask questions. We can have live broadcasts. I can do some mini teaching. If you have anything you want to bring into the group as far as knowledge or expertise, that would be very welcome. We want to stay away from the garbage self-promotion. And as I keep saying in these videos, if you're an instructor, if you teach other people how to do this and you really know what you're talking about, and it's more than just some get-rich-quick type of an idea, you're welcome into the club. I have no problem supporting other either YouTube channels or other folks that do similar types of teaching. Now, I focus on the S&P 500 because there's more that we can do with the S&P 500 than we'll ever have money to do. You can be conservative, you can be aggressive, you can be short, intermediate, or long-term. You can live out on the cutting edge if you want to. You can use it for capital appreciation. You can use it when the market goes up or down. You can use it to generate income. So for me personally, I just stick with the S&P 500. Even though we watch all these other markets, that has an influence on the S&P 500. But if you are in different markets, or if you are really good at individual stocks, feel free, come and join us. It's really no problem. We just want to try to stay focused and keep it relevant and keep it useful. The best way to contact me is either look for me, and I meant to put a link to my Facebook account on this slide. I'll do that for the next video, but probably the best way to contact me is john@spxinvesting.com. You're also going to notice in my voice, I've been coughing and hacking a lot while I do these videos because I'm using a different type of recording system. I'm using Zoom right now. And the other software that I use that I don't have access to right now, I can go back in, I can take out the throat clearing. I can, if I totally screw up my words, I can go and take that out. Well, with a Zoom recording, and I don't have access to the other software that I use, you pretty much are getting these take one, and that's why I call them take one videos. Anyway, so let's go back over Wednesday and what happened. We did have a gap higher open, not a huge gap, but it was a gap to the upside. But then what we're seeing, and I'm developing something in my throat as well, so I ask for forgiveness for that. I spend my days lecturing and talking lots and lots and lots. So sometimes my voice just gets a little bit tired. Anyway, we did see a gap higher open. And then what is common, no matter what the environment that we're in, is we saw some initial selling. And that selling took prices down to the unchanged level, which, since we had a higher open, the unchanged level acted as support. When we didn't break through that level, we saw buyers entering back into the market. And this idea, at least right now, last few sessions, selling into strength did not continue. So they're laying off of that idea right now. Going into the close, we did see increased buying, which again, that to me shows a little more strength, and that's a little more healthy, because once the selling into strength doesn't appear and people are watching the market and seeing some opportunities and then buying that into the close, that's a pretty positive sign. So prices closed right near the high, but I'll show you this on the chart. The previous low that I have on the chart from last week is now potentially acting as resistance. And we closed right at that level on Wednesday, and we were up 0.69% for the day. Volume was above average. As far as what the markets are concerned with right now, the bounce has been continuing, and we're seeing improved technicals. Earnings, this is an issue right now because Facebook is one of the big boys, and it might carry over into the session on Thursday. Everybody's still talking about inflation and interest rates, and of course, the different geopolitical concerns that are happening right now. As far as what we can take away from the session on Wednesday, buying did continue into the close. That's positive. The technicals are improving, and I have a lot of charts that I've been showing in the last few videos. I'm not showing those because they're not really telling us anything new. They are just showing some signs of improvement. But where we're seeing some problems or potential problems, the small caps and the mid caps are lagging. They're not really coming up out of that base the way the large cap stocks are. And then, as I talked about, we had Facebook, they're down heavily after hours, and then Spotify, which has been in the news a lot lately. That's really getting creamed right now as well. We did have an economic report that came out on Wednesday. It's the ADP employment change, and they were anticipating an advance of a couple 100,000 jobs. Well, instead, they saw a decline of 301,000 jobs. That was way different than expected, and that shows a much weaker economy. Now, this report is not considered to be that important. It came out a number of years ago. It's been gaining in popularity, and it's kind of a precursor to the big report that will come out on Friday that gives us how many jobs were created, what the unemployment rate is, the hourly hours, average hours week. Okay. The average weekly hours worked, and the prices, and if people are making money or not making money. That's the big one that'll come out on Friday. Then, as far as the current valuation, we continue to be overvalued, and that won't change in the foreseeable future. And then I switched our trend over to being positive. At least the ADX is still kind of shifting right now, and it might be a weakening trend. But when you look at some of the other indicators, we are in a positive trend now. I switched it over from negative, but it's a cautious positive trend. The bias, because we've been having up days, and the momentum both continue to be positive. So let's look at the day's session. As far as sentiment, we're not showing an extreme reading right now, and we're just about in the middle as far as our sentiment gauge that we look at. And I look at lots of other things too. This one, since it's freely available on the internet, I can just take a screenshot of this and show it to you. Then looking at the VIX, we're coming down on a closing basis, right back down to the moving average. And these moving averages are not magic. What I'm doing is I'm trying to look at what is the general trend of the VIX, because for a long time, myself included, a lot of people would just use the static level of 20. Well, that doesn't seem to be working as much anymore as it used to. So now we have to go more with something that adjusts over a period of time. And I've been trying out some different moving averages. And then down below, one thing that is potentially negative is that we closed near. Nope, that's actually positive. I'm sorry, I read that upside down. We closed near the low for the VIX. Anytime we see some buying going into the close, you'll see fear start to decrease. And so that's positive. So we're seeing the VIX really starting to come down. And then the VIX of the VIX, this is what I looked at that potentially could be a little bit negative. The VIX of the VIX, yeah, it's declining, but we closed right near the high of this particular indicator. So this is showing a little more internalized fear within the VIX. As far as our sectors, we had 10 out of 11 that were up. Communication, real estate, utilities all did very well. Staples, a lot of those areas have been getting hammered, or more the value plays, excuse me, where the growth areas, tech and so forth, they were up on the day, but not as strong. So we're seeing a continued shift, slight shift going over from growth stocks into more value oriented stocks. Discretionary was the only one that was down on the day. Then overall, energy continues to lead. Discretionary continues to be in last place as far as the sectors are concerned. As far as inflation, our BDI did turn up ever so slightly right now, but nothing really significant to give us any decent insight on this chart. As far as the technical alerts, we had mostly positive. Anytime we have an update, you'll see more and more positive technical alerts. Where the NASDAQ crossed above 14.4, well, then it ended up going below 14.3. The S&P 500 has a bullish MACD crossover, which is what I'm showing on my chart as well. And that's pretty much it for the S&P 500 right now. But we're seeing more positive technical signals than we are negative currently. As far as our intraday chart, looking way over on the right, we did gap up higher, right about to the pivot level. We came down to the unchanged level. And that just always amazes me how that's a built-in support or resistance level quite often. We came up out of that, we're able to go back above R1. And then this line was actually on the chart from a week ago that is showing some previous week's support that we ended up breaking through. Well, we closed right back at this level. That's why I keep these lines on the charts, is they may come into play at some point in the future. It's not necessarily really significant, but it helps to just kind of explain what's happening. Then we can see this a little bit. And I drew this black line right on here just to show the low that we ended up breaking through before things got really crazy last week. But now we're coming right back up to that level. And we're still above the October lows. So the technical picture, at least looking at this bar chart, does show improvement. We're now down on a closing basis, 4.32% from the all-time high set earlier in January. We saw a little bit of continuation of the growth advancing, but under the surface, we're seeing a little bit more of a shift into value. But the real price movement is still coming in the form of the growth stocks. So that's why this chart is actually showing value declining a little bit. The NASDAQ the NASDAQ 100 compared to the S&P 500, it actually declined a little bit. So the broader market outperformed the NASDAQ 100, at least for Wednesday's session. As far as our trend, now we're starting to see a rollover. And this should not be surprising. As the red line is coming down and the green line is coming up, this potentially could produce a cross. This does not necessarily mean it's positive. This just means that we're having a weakening trend right now. And if this continues to fall, then we will be more in a sideways pattern rather than an actual trending pattern. As far as our breadth, we're seeing improvement, but nothing real gangbuster positive here. Yeah, the advancing issues in the S&P 500, we saw more advancing issues based on price and volume than we did declining issues in volume. And so our moving average is starting to turn back up. We still want to get above this moving average right now. It's leveling off. It would be, from a positive perspective, it would be better if we could break above this and then see this red line start to turn back up. Our advanced decline ratio, with the positive day and with the positive breadth, that is giving us more of a positive indication right now. New highs and new lows, they're starting to turn back up positive. With the moving average, it's slower, so it's still continuing to decline. The new highs, new lows. Now, this is based on the NYSE. Ideally, what I would want to do with this chart, and I have a chart like this, is not just look at the NYSE new highs and new lows, look at the S&P 500 new highs and new lows. And I have that data, but it only goes back to like 2010. Where we're really looking at these days is going back into the dot-com bust in 2000, and then into the financial meltdown from 2007 into 2008. And we're doing a lot of comparisons between what do we see happening now compared to what was happening then. Well, if the data on the S&P 500 only goes back to 2010, it misses both of these other times in history where this happened. So then I have to default over to the NYSE, new highs and new lows. And as I said earlier, we hit the all-time high in January. Then we saw a real significant drop. And it would be very positive if this could come back up and get at 0 or above. Well, with Wednesday's advance, that did decline a little bit more. So that is a little more positive reading that I'm taking from this. Our accumulation, this potentially could be positive too. The blue line crossed above the red line. And if we start to see this red line turn up, which we are, but we see some follow through to that, that would be a sign of more strength. Our short-term charts, we're back above the 20-period moving average. And as long as we stay above that, these lines will start to turn and go back up. Our moving average studies, we're looking pretty good with the 20, pretty good with the 50, and pretty good with the 200. Much more improvement than what we were seeing just a few days ago. Our other moving average study that we talk about, right now we're dealing with we're trying to get above the 50-period exponential moving average. And that's a big moving average to a lot of people. And we stopped right about at that level on Wednesday. So if we're going to continue being positive, we want to break above that. But we also want to look at some of these other moving averages because they could act as resistance. Or if we do start to turn and go lower, now we're kind of dealing with the 200 moving averages. The MACD has now crossed over positive, and that was the same technical alert that I showed you just a minute ago. Our short-term trading oscillator, looking good on price, looking good on volume. The McClellan oscillator, it's also above 0 and advancing. The Stoke RSI, now it's getting us into overbought territory. But again, see how this can stay this way for a long time. Then I pulled out all of the rate of change charts that I have been looking at because it's not really telling us anything. The one that's a little bit of a warning sign, and the reason why I'm saying that maybe we're going a little too far, too fast with our bounce here, is look at this chart, the rate of change 5. We're getting up to a pretty extreme positive reading. So for us to go sideways or even see a down 1 or 2 days would help this indicator come back down. And if it's not really intense down days, it could help the technical picture overall to turn it back to being more positive. As far as our intermediate term charts, we are still dealing with the 50-period moving average. We closed right there, as I mentioned. Our PMO, it's negative, but looking better. Also based on price and volume, the same basic story. Our other PMO study, those that have a rising PMO, we're starting to get a little bit near the top. We still have more room to run. We just kind of want to keep an eye on this. Those that are giving buy signals, that's improving. And those that are above zero, that's also improving. So where we are really seeing an improvement in the technical picture. BDI, there were more buy signals inside the S&P 500 that were generated. So this continues to advance. Our rainbow, it's in danger of dropping below the red right here. We're not as concerned about that as much, but if somehow over the next few days, if we could bounce back above these moving averages, this would help make a stronger case for a continuation of the uptrend. Stochastics, short, intermediate, long-term, looking positive. The vortex, which again, I may drop this out of the next video because we're starting to go sideways at the current time on this chart. Summation index is turning up based on price and has already turned up based on volume. All of our momentum oscillators, some of the shorter term ones are looking positive. Our longer term ones are still negative, and our more intermediate term ones are showing some improvement. The CMF, again, if we have another update, I may drop this out of the update, but we were actually able to cross over positive on Wednesday. As far as our trading systems, this is looking much better. We have a third day now in the elder system with a green bar, and now we're coming back above the moving average here. And the MACD down below is crossing above this blue line. So that's showing signs of improvement. Same thing with the SAR. As we continue to have up days, these little dots form down below. Our different charts, the Heiken Ashi continues to show improvement. The Kegi has not changed, but is still looking more positive because we had a blue bar that was drawn after Tuesday. And the Kegi is looking a little more positive now. It put in a clear box, which is showing the upward movement that we've been seeing. Our three-line break also is showing us more of an improvement. Equi-volume, we're still going up nicely. The 1 period ease of movement indicators falling off a little bit. That could suggest that maybe we're not going too far too fast to the upside. And with our ease of movement 14 period indicator, it actually trailed off a little bit. Our point and figure, it's counting this as a double top breakout, which we want to see this go up, get back to where this number 1 is, and then actually be able to break above where this previous X was at before, for this chart to be even more positive. But with the X's being drawn, that is positive, and the green, the blue line is suggesting that we're in an overall uptrend. Our longer term charts, both the equal weight and the S&P continue to move more hand in hand. The special K, and this might be the last time I show this chart for a while because we're really seeing the same things. This is a longer term oscillator and it has crossed negative. And here's a longer term view of that same chart. What I probably will do is take this off from the daily videos and then look at it. And then once it starts to tell us something again, that's when I bring it back. Our broad market indicators that we look at, see the S&P is breaking out nicely. The mid caps, not so much. Didn't really see much of a follow through. And the small caps, we're kind of still going sideways. We're in this overall base that we were in before. The FANG stocks, they were well off their highs on Wednesday, but we do see an overall, well, we're actually down a little bit on the day for that. They tried to go higher, but then we saw some selling come in as the day went on. ARC actually, let's see, it was down over 5% again. It's all over the place these days. The Dow, these are the bluest of the blue chips, according to the market. It's breaking above the 50-period moving average, which is quite positive. Then small caps, yeah, we're still trapped sideways and we're in danger of the 50 dropping below the 20. Mid caps, we're right at the pivot for February with a declining 50-period moving average. The NASDAQ itself, we're right on the pivot. That's always kind of interesting when that happens, because a lot of the algorithms out there, the program trading and so forth, they program this stuff in to what to do. And so that's why you see a lot of these technical analysis charts being quite accurate. It's not that they're telling you a secret, it's because everybody's looking at these charts at the same time, and it's more of a self-fulfilling prophecy that we're seeing going on. NASDAQ 100, the bigger stocks, it actually was able to break above the pivot. Then the Vixen, and this is another one that's a little bit negative, where we had been declining with this is the VIX on the NASDAQ 100. We had been declining, but as the day went on, we ended up closing right near the high of the session. NYSE, it's showing a little bit more of an improvement where we're breaking above the 50, and that potentially could turn the 50-period moving average back up. Wilshire, kind of the same thing, only we're right at the 200-period moving average with this index. As far as our other broad markets, the dollar, which had a great week last week, is just getting slaughtered this week. We got up into the 97s last week. Well, we dropped below 96, and that's a huge move. This is the daily chart, and we're just a little bit below the moving average. Here's the weekly chart where this moving average is acting potentially as support. Oil was up slightly. And these are some of the charts that I usually show every day, no matter what's happening in the market, because we not only look at the S&P, we do intermarket analysis as well to see what's going on in the other markets. Gold continues to pretty much tread sideways after having the death cross. And palladium, it's shooting up slightly. Again, if we kind of just stay around where we're at now, I might drop this chart out of the updates. Silver, it's kind of treading sideways and was actually down a little bit on Wednesday. The CRB, though, overall was up over 1% on Wednesday. And then Bitcoin, we're not seeing a lot of action. And I may drop this chart too. What we're really looking for is the potential head and shoulders in here, which could be inside of an even bigger head and shoulders, but that will take months to develop into the future. Where we're looking at is if things drop below 30 and even into 29, what's going to happen? And Bitcoin itself has been mostly treading sideways, so we're not seeing a lot of really big movements right now. Everybody's waiting for somebody else to do something. As far as bonds, we saw a little bit of a decline in the 30, in the 10, and in the 5, and in the 2. And so interest rates were pretty much down across the board. So what's our outlook for Thursday? The technicals still show improvement. The short term may possibly be getting overextended, especially because we're butting into some overhead resistance, not major resistance. And with this news coming out about Facebook, it's such a big player that could feed into the overall market scenario. So the short-term and intermediate-term rebound does continue as of right now. Small and mid caps are trying to break out of last week's range. The long-term trend is up, but still showing some signs of weakness, but it's also showing some signs of strength as well. Earnings season continues, and again, with Facebook and Spotify, they're down heavily in pre-market. As far as the economic reports, it'll come out on Thursday. The big one's Friday. That's the employment situation. But on Thursday, we have the ISM index, and then initial and continuing jobless claims will be coming out. And this used to not be that big of a deal, but because employment and all this stimulus and so many people not working, we really want to keep an eye on that. And then, of course, the continuation of the geopolitical events between Russia and Ukraine and just how that whole thing may play out. So our conclusion is I've switched this back to the S&P is in a mixed to uptrend, kind of a tentative uptrend right now. The short-term and intermediate-term bias are both positive. We're seeing a lot of improvement on the intermediate term. And then the long-term bias does remain positive as well. So thank you very much. I hope you have a wonderful Thursday, and I will talk to you again on Friday.